Topic 1. Authority. Revenue rulings. It is considered the substantial authority standard for a position taken on a tax return. Substantial authority does not include IRS forms or accompanying instructions, IRS publications, or information on IRS website. Primary authority of U.S. tax law is the Supreme Court and the Internal Revenue Code. Secondary authority would be the U.S. Tax Court and private letter rulings. Tax advice and written memoranda. Private letter rulings are written memoranda by the IRS in response to specific advice requests by taxpayers. Many private letter rulings will cost well in excess of $10,000. Technical advice memoranda, or TAM, are written memoranda furnished by the IRS upon request of a district director or a chief appeals officer pursuant to annual review procedures. Revenue rulings are official IRS pronouncements. Chief Counsel Advice, or CCA, are instructions prepared by the Office of Chief Counsel and issued to employees of IRS field or service center offices or the Office of Chief Counsel. Next topic, audit. Audit reconsideration. Could request an audit reconsideration except when the full amount owed has already been paid. There's 3 types of audits. Correspondence audit, which is by mail. Office audit, which is at the IRS office, and this is usually for Schedule A, C, and E. Field examinations at taxpayer's home or business office. These are more detailed and conducted only by IRS revenue agents. IRS examination. It is a review of the accounts and financial information supporting the items reported. It evaluates information being reported correctly and according to tax laws. It verifies amounts of tax reported is accurate. It is on the taxpayer's burden of proof. If taxpayer disagrees with adjustments, taxpayer can appeal the determination through the appeals process. How are returns selected for examination? There's a few methods. One is potentially abusive tax avoidance transactions, computer scoring, or DIF score, and this stands for Discriminant Inventory Function System, information matching, related examinations, third-party information. Formal examinations are also known as IRS audits. These comes in letters CP 2000 notices, and these are issued when the IRS system does not match the tax return. Examination rights and obligations. Right to professional and courteous treatment by the IRS employees. Right to privacy and confidentiality about tax matters. Right to know when IRS is asking for information, how will it be used, and what will happen if info is not provided. The right to representation, either by oneself or an authorized representative. The right to appeal disagreements with IRS and or before the courts. IRS uses Form 4564 Information Document Request. If information is not provided, examiner may issue a summons. Audit location and procedures. IRS examiners are instructed to work with taxpayers convenient, but IRS retains the right to make the final determination of when, where, and how examination will take place. The examination report is Form 4549. Audit determinations. Audit can be closed in one of 3 ways: no change, agreed, unagreed. This last one, taxpayer might request a fast-track mediation or appeal. Taxpayer does not have to file a written protest to request fast-track mediation. The taxpayer may also choose to go to court and contest the IRS determination. Closed examination. IRS will not reopen to make unfavorable adjustment in assessed additional taxes unless there was fraud or a misrepresentation, there was substantial error based on an established IRS position existing at the time of the examination, or failure to reopen the case would be a serious administrative omission. The next topic is evasion and avoidance. Evasion is an illegal practice in which individual or business intentionally avoid paying their true tax liabilities. Those caught evading taxes are subject to criminal charges and substantial penalties. Affirmative act. Examples: deceit, subterfuge, camouflage, concealment, attempts to obscure events, make things seem other than what they are. Avoidance is commonly used to describe the legal reduction of taxable income, such as through deductions or credits. Penalties for tax evasion. For each year taxpayer does not file tax return, the penalty can include a fine up to $25,000 and prison sentence for up to 1 year. If it can be demonstrated that the taxpayer deliberately did not file in an attempt to evade taxation, the IRS can pursue a felony conviction, which can include a fine up to $100,000 and a maximum prison sentence of 5 years. This would be in addition to any civil penalties which may also be assessed. We continue with tax evasion. The badges of fraud. Common types of deception and fraud on tax returns include deducting personal items on a business expense, the overstatement of deduction, and understatement of income. Other schemes include intentional omission of income, especially cash payments, claiming fictitious deductions, false allocation of income, improper claims, credits or exemptions, and or concealment of assets. Frivolous and collection due process. Under Section 6673 and 6702, there is a penalty up to $25,000 for making frivolous arguments before U.S. tax court, and $5,000 penalty for frivolous tax returns. If the taxpayer requests a collection due process hearing and provides frivolous arguments, in whole or part, those arguments will not be heard. If the appeal is deemed frivolous, taxpayer will be given 30 days to withdraw or amend a collection due process appeal. Frivolous position is one that the practitioner knows is in bad faith and is improper. 6702 frivolous tax return is one that does not include enough information to figure the correct tax, or that contains information clearly showing that the tax reported is substantially incorrect. Tax protester arguments include contentious that filing of a tax return or payment is voluntarily, only foreign source of income is taxable, or that non-U.S. citizen is not subject to federal income tax. Alteration of jurat. 6702 $5,000 penalty. 6651 additional penalties for failure to file return, failure to pay tax owed, and fraudulent failure to file a return. If crossing out, striking the jurat, tax return is considered unfiled. Frivolous position include those that contend that income is not valid, payment of taxes voluntarily, a person or a type of income is not subject to tax, espouse other arguments that the courts have previously rejected as baseless.